Welcome everybody, thanks for joining the webinar today. My name is Chris Ashton, I am the head mentor at the Corellian Academy. I was a trader for 18 years, first at UBS and then Barclays, and since leaving I focus solely on delivering content on what's happening in financial markets. Today, as part of this journey to becoming a more informed trader and increasing your knowledge of some of the markets that are available to trade on the Plus500 platform, I'm going to discuss the S&P 500 index, which is a CFD based on the S&P 500 index futures and is one of the most actively traded stock indices globally. At the start of the webinar, I will briefly run through some of the important facts about this index, then identify some of the general drivers that could influence its value or price when you are potentially trading. After that, I'll move on to run through an S&P index 500 index CFD case study from the end of January. And then I'll end up by outlining some potential developments that could have an impact on where this index moves next later in March and beyond. My focus is to identify some of the things a prospective or current S&P 500 index trader could consider, and in the case study, provide an example of a risk management thought process a trader could utilize each and every time they trade. As we go through this webinar, it's important to understand there are signals that come from the markets, and if used in a more structured way, these opportunities can potentially be seized upon to create a positive outcome. Although that may not always be the case, as there are always unforeseen factors that can negatively impact even the best thought out and planned trades. Okay, let's move on. So what is the S&P 500 index and why is it such a popular market to trade? As I said at the start, the S&P 500 index that you see on your Plus500 platform is a CFD based on the S&P 500 index futures. The S&P 500 is one of the most actively traded stock indices globally and includes 500 leading US companies covering approximately 80% of the available market capitalization. For that reason, it is one of the most commonly used benchmarks for gauging the general performance of not only US stock markets, but also the broader US economy. On Friday, the 23rd of February, 2024, the S&P 500 index hit a new all-time high, giving it a total value at that time of around a colossal $42.5 trillion. If we look a little bit deeper into the S&P 500, we can see it's divided into several sectors, each representing a different segment of the US economy. Each sector contains a group of related industries and companies. And now the weightings of each sector in the index, which you can see on the screen now, can change over time as the performance of the individual companies and industries within those sectors fluctuates. Now, by far the most influential sector within the index is information technology. And that's because this sector contains 7 of the 9 biggest companies on the planet, otherwise known as the Magnificent Seven. That is Microsoft, Apple, Nvidia, Alphabet, Amazon, Meta, and Tesla. To emphasize just how big these companies are, the number next to the company name represents its total value as of Friday, the 23rd of February, 2024. This is important when trading the S&P 500 as it is a market capitalization weighted index, meaning larger companies have a greater impact on its performance. So the fortunes of these 7 stocks, as well as Berkshire Hathaway and the pharmaceutical giant Eli Lilly, have a huge impact on the general sentiment and direction of the wider S&P 500 index. Okay, so that's the basic facts. Let's look at some of the general drivers that can each have an influence on the direction and price of the S&P 500 index at certain key times. These can be split into 3 general categories, all of which are important considerations when planning any trade. The first category focuses on the earnings of individual companies within the S&P 500 and corporate events. The financial performance of the companies within the S&P 500 index has a significant impact on its movement. Usually, positive earnings reports and revenue growth from these companies can drive the index higher, while disappointing results and fall in revenue can lead to declines in the index. Earnings reporting season happens every 3 months or quarter, and the most recent reporting season started on Friday, the 12th of January, and it actually doesn't finish until Thursday, the 7th of March. You can check out when the most recent individual S&P 500 company earnings are when they're due using your Plus500 platform by clicking Menu, Tools, Economic Calendar, clicking the Corporate Events box, Click on the funnel and uncheck the dividends box, and this will show you the earnings for individual companies for any given period of your choosing. If you want to know what company is reporting on a certain date, then click the calendar, pick your date, and all the companies reporting their earnings for that day will be listed. The next category is economic data and central bank events. US economic indicators such as GDP growth, unemployment rates, inflation, and consumer sentiment can affect investor confidence and consequently the S&P 500 index. As a general rule, positive economic data correlates with a rise in stock index, while negative data can lead to declines. However, the big caveat to this is how the outcome of these economic data releases impacts central bank policy. The US central bank is known as the Federal Reserve, or Fed for short, and their policies, particularly changes in interest rates, can have a big influence on sentiment and the direction of the S&P 500 index. Lower interest rates or expectations of lower interest rates, which is the environment markets are currently in, tend to make stocks more attractive to investors, potentially boosting the index, while higher interest rates, like traders experience across financial markets in 2022 and 2023, can have the opposite effect. To access the economic calendar on your Plus500 platform, click Menu, Tools, Economic Calendar, and there, as you can see, the economic data for any given period or day or key central bank meetings are listed for you. The final category to consider is market sentiment and positioning. Market sentiment can play a significant role in S&P 500 index movements. Positive sentiment can drive the buying of stocks and push the index higher, while fear and uncertainty around key data releases or geopolitical events like what is currently playing out in the Middle East can lead to selling and declines. At certain times, strong market sentiment leads to a large buildup of positions, which can then lead to an unexpected reversal in the direction of the S&P 500 index, triggered, for example, when a scheduled event like a central bank interest rate decision fails to generate the outcome expected by the market. Or an unplanned headline sees traders rush to reduce positions, quickly pushing the S&P 500 index in the opposite direction. Now that's the basic categories. I should say there are more detailed considerations that traders and investors use to analyze and predict movements in the S&P 500 index CFD, but that is a deeper discussion for a deeper webinar. What this does mean is that trader behavior can be unpredictable and subject to rapid changes. Highlighting what I said at the start, even the best planned trades can at times be negatively impacted by something out of nowhere. So that's set the scene. Now let's move on and consider the case study. This case study is focused on providing an example of how you could have traded the S&P 500 index CFD and risk managed a live position around the Fed interest rate decision and press conference on the evening of Wednesday, January the 31st. The trade idea that is formulating ahead of this meeting is that the Fed, specifically Chairman Powell in the press conference, will push back on the idea of Fed rate cuts starting in March, as the economic data up to this point in 2024 still shows a resilient US economy. If I'm correct in this assumption, there should be some sort of sell-off in the S&P 500 index as traders are disappointed by the Fed and rush to lock in profits on long positions while the index still sits around its all-time highs. I want to execute a sell to enter a short position and potentially benefit from any move lower in the S&P 500 index. With this in mind, my first consideration is trade planning in advance of the event. I can do this over a weekend or at the start of my trading day. For this example, I choose to do some basic planning over the weekend to get my thought process in place and then reassess day by day in order to account for the index moves and events I need to focus on. This is important as the S&P 500 index can move quickly, so I want to plan ahead to make use of risk management tools available on the Plus500 platform. To protect my position if my trade idea was incorrect and the market moves against me, but also to plan a successful exit to my position if my trade idea was right and the market moves my way. In this section, I will use terms such as stop loss and take profit orders. A stop loss is an order I can enter in advance on the Plus500 platform to close my position at a defined price level I have planned for, which limits my loss in the event of an unfavorable move. A take profit order is a different type of order I can enter in advance to close my position at defined price level I have planned for to profit from a favourable move in the instrument I am trading. Okay, so step one, I need to check the economic calendar and make sure I am aware the Fed interest rate decision is released on January the 31st at 1900 GMT and that the press conference starts at 1930 GMT. I discussed how the economic calendar can be accessed on the Plus500 system earlier in this webinar. I also need to check for any other events that may be relevant to my trade. For this, I also check the corporate earnings calendar and see that Microsoft and Alphabet are reporting their earnings on Tuesday, the 30th of January, after the market close. This is important for my trade, given that these companies are a big component of the S&P 500 index, as I highlighted earlier in the webinar. Okay, so step two, check the charts to assess the price action and general sentiment for the S&P 500 index. The charts show the index trending up in the middle of January as bullish sentiment towards stocks leads to further buying from traders, pushing the index to a high at that time at 4,933 on Tuesday, the 24th of January. However, since then, there was some sideways price action between 4,889 and 4,933 into the end of the week on Friday, 26th of January. And this reflects some indecision about the next directional move for the index in the week ahead. And it closed on Friday at 4,916, right in the middle of that 3-day range. Now, I completed steps 1 and 2 over the weekend, so I have something to support my trade idea. Now it's all about watching and assessing the S&P 500 index at the start of the new week to try and time the execution of my initial sell trade. Now, my next consideration is identifying some tradable levels. To do this, I observe the price action of the S&P 500 index at the start of the new week. After a brief dip to a low at 4,901 on the Monday open in Asia, bullish sentiment continues, with the index moving higher again across the day, eventually jumping above that previous all-time high at 4,933 that I identified over the weekend, to print a new peak at 4,956. On Tuesday, the index trades in a tight range between 4,940 and 4,956 as traders await the Microsoft and Alphabet earnings reports, which are released in the last hour of trading. Now, after these are released, I observe a sharp sell-off in the index as traders are disappointed by what they have seen in the results. The market drops from 4,950 to 4,926 over the next 2 hours. I now have identified 2 key things. The first is that the bullish sentiment of traders at the start of the week has started to reverse after the earnings of Microsoft and Alphabet. The second is that I have now found a new resistance level at 4,956, a level that stopped buying on a previous occasion and a level I hope will hold further buying on any other moves higher. If I expect the market to push lower as traders are disappointed by what they hear from the Fed about early rate cuts, this could be a good potential sell opportunity with a defined level above which I know I am wrong and will be happy to exit the trade. Now I am keen to see how the market trades on Wednesday. If it stabilizes around this 4,930 area, I will be happy to sell, anticipating a move lower later in the day when traders get to hear from the Fed and Chairman Powell. The final consideration is trade execution. The market trades stable on Wednesday morning around 4,930. So step 1, I sell at 4,930 and place a stop loss to protect my position on the top side if the trade goes against me at 4,960, above that all-time high I identified at 4,956. I set this stop loss order on the Plus500 system. Step 2, next I want to assess viable take profit levels for my live position if I'm correct and the market does move lower. Now I have identified a support at 4,875, which was the low from the 23rd of January. So I placed my take profit order at 4,878, just above those old lows, as I want to make sure that I give myself the best possible opportunity for my order to be executed. This is a level the market has traded down to previously, so I anticipate that it can do so again if the market is disappointed by what it hears from the Fed. I set this take profit order on the Plus500 system in advance as well. Now, it's key to get across to you here that I am happy to buy in this area. It doesn't matter to me that the market may continue lower. I've achieved my goal and I should be able to walk away happy in the knowledge that my trade idea worked, and now I can look for my next trade. In summary, as I let this trade play out, this is a structured trade. I am selling at 4,930 and I set my stop loss on the Plus500 platform at 4,960, just above that old high at 4,956. And I've set my take profit on the Plus500 system at 4,878, just above that previous low from the 23rd of January of 4,875. Now, as you can see, the 4,878 target was hit. Now, to be clear, this isn't investment advice, but just one example of how you could have traded the S&P 500 index CFD on the Plus500 platform over the Fed interest rate decision and press conference on the 31st of January. Now, I can see that there are lots of questions, but just before I start responding to those, I wanted to highlight two areas that I think will be important for the direction of the S&P 500 index going forward into March. The first is US economic data. The Fed have been clear that interest rate decisions are data dependent, so key pieces of data like Thursday's PCE inflation release, which is the Fed's preferred gauge of inflation, or Friday the 8th of March's non-farm payrolls, is going to have a big impact on market expectations of when interest rate cuts may start to be announced by the Fed. And this is all before we get to hear from the Fed themselves in their interest rate decision, which is actually, and press conference, which is actually on Wednesday, the 20th of March. The second thing to think about is the uncertainty being created by geopolitical events in the Middle East, which could impact future sales revenue of S&P 500 companies, and the shipping chaos being created in the Red Sea, which is threatening global supply chains, which could hurt profit margins. Bloomberg recently reported, and you can see that on screen, that the number of CEOs referencing these issues in their earnings call so far in the first 2 months of 2024 is on the rise. This issue is important as the S&P 500 index has reached record levels on the back of hopes of lower Fed interest rates as inflation falls and a soft landing for the US economy. If geopolitical events lead to higher energy prices or supply chain problems, which push inflation higher and start to weaken the US economy, it could lead to a repricing of trader expectations and also lead to a rush to lock in some profits made on this 4-month rally in the S&P 500 index. Okay, thank you for listening. Let's move on to the questions.